just days after JP Morgan reported a $2 billion trading loss, the stock is now trading up, even though they're going to be having their shareholder meeting. And actually, a lot of the banks are trading up today. I'm here with Ben Willis from Sunrise Securities. So Ben, it seems like, now that the market has digested this news, they've already moved on long after the press and the pundits are going to keep talking about this $2 billion loss for days.
Well, it's a $2 billion loss. It was a $20 billion haircut on the market cap. Ridiculous number, unless you think that's the political cost, which the political cost to JP Morgan is going to be enormous. You have the President of the United States on regular talk shows picking on JP Morgan, and then backhand complimenting, saying, but they're the best, so if this is the best they can do, everybody else is in trouble. That's why the bank sold off. I think you're getting a relief from that pressure, the political sell-off pressure, and that's why you're seeing banks perform a little bit better today than they did yesterday.
Is it a good idea to go on and start to tiptoe back into the financial sector? Because for the longest time, we kept calling a bottom and a bottom and a bottom, and it seemed like it was, of course, a bottom's hard to call. But do you think that this has made it even more difficult for investors to get into these stocks?
Yes, but as an investor, that's the opportunity. I believe an investor should use those opportunities when nobody else wants them. Do you really think those banks that you walk into every day are going to go out of business? Or is the bank you go into every day going to be attractive to one of those banks, a larger bank? Maybe not the big banks. There's a little bit too risk if you're risk averse, but I still think the financials are a place where you should have exposure in your portfolio, because when the storm is over, you're going to wish you had already owned them. That's just my perspective on them, particularly if you want to look at the regionals and maybe some of the lesser knowns. But again, the risk, JP Morgan was a $2 billion hit. If you look in terms of their balance sheet, they spent 10 cents to protect $100, but yet the real expense right now to the shareholders is not the $2 billion. It's the expense that they have to pay the likes of the Obama administration and the Republicans in Congress now that want to take cheap shots at them. The fact of the matter is, it's not a lot of money to JP Morgan. It's not going to affect their earning ability. What it's going to affect is all the other banks that are now going to have the regulator staring at them and see what other risks they may have. And it's not a good thing to have people in the government who don't understand your business to begin with tell you how to do it.
And I'm sure he hated the moment he had to make that call. Thank you, Ben. That's Ben Willis from Sunrise Securities.
This market is
stock pickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going to